Hi, my name's Ken Parson, and I'm the owner and sole proprietor of Ken Parson Insurance. One of the questions that is asked oftentimes in the insurance industry is, should I buy term life insurance or whole life insurance? Now, if you go and Google that question, you're going to see so many things pop up that you will not believe it. And you know what? It's like so many things in this industry, it all depends. And I think people looking at life insurance might get frustrated, and that's probably why almost half the people in this country don't have any life insurance, which shouldn't be, but because there are so many questions and concerns, and one of them is about this question of term and whole. And here's my feeling on it. Most financial advisors are you're gonna read will say get term and invest the difference. Well, what do you mean by difference? Well, term life insurance cost-wise is by far the cheapest. You can get terms of 10, 20, and 30 years, and even if you go with a 30-year term, which means your rate is fixed for 30 years, your price is going to still be way below what it would be if you got whole life insurance. Well, what is whole life insurance? Well, whole simply means that instead of the insurance covering you for a certain term, it's good for your whole life. So if you got it at age 25, it's going to cover you for your whole life. If you live to be 100 years old, you will have that life insurance, whatever amount of benefit you chose to purchase, at that price for your whole life. That's the upside. The downside is that you're going to pay a lot of money to have that benefit. Now, I would submit to you, and this is just my opinion, that if you would take the difference between the cost of whole life and the cost of term life and invest it over the long period of time, you will be better off. But here's the question: will you invest it? It's kind of like the Christmas club savings concept that people do with their banks, and now they even have vacation clubs. People force themselves or automatically have a certain amount of money deducted from their paycheck to go into these clubs because they're afraid that otherwise they wouldn't save that money and it wouldn't be there when it came time to start their Christmas shopping or go on the vacation. So you have to take a hard look at yourself and say, will I actually take the difference in the cost and invest it? So speaking of investments, there are two types of what we call permanent life insurance, and permanent simply means that it would be good for your whole life. The price would not change as you got older as you went past a certain age. Like I said, term life insurance maxes out at 30 years. So if you buy term life at 30 years old, at age 60, it will have maxed out. And if you do want to buy some more life insurance at that point, it's going to be based on your age of 60. So there's a potential downside. But the two types of permanent insurances are universal and whole. Universal has very little investment value. It used to have some more, but it doesn't have much these days. So you shouldn't even look at it in any way as an investment tool, in my opinion. But you will be fixing your price, and it'll be fixed for your life. Whole potentially has some investment value. Very conservative interest rates, because everybody knows where interest rates are these days. But if you are able to hold it and you get it early and leave it for a long time, you could potentially get some decent amount of cash value built out of that. You also have the ability to take loans off of loan from yourself, if you will, and then pay yourself back. But very few people are looking at the purchase of whole life these days as an investment tool. In the old days, and I'm going back, 8-10 years ago, and when interest rates were high and longer, and interest rates were high, there were some people that did look at it as a good, solid, conservative, but growing investment tool. No longer. So what sort of difference in price are we talking about? Well, I recently did a quote for someone who was a healthy 35-year-old female, and I want to say that whole life might have been as much as 6 times for the cost of the term life. I think the universal was 2 to 3 times as much, and as the term, and then the whole was another 2 times as much as the universal. So at the end of the day, that whole life policy for the same dollar amount, everything else being the same, but one was whole, one was going to cover her all the way through till 104 years old, excuse me, and one was going to be term life for 30 years, take her up to age 65. It was almost 6 times the difference. So surprisingly enough, we haven't gotten a final decision on that one yet. They are mulling over. Now, the other thing you can do is you can consider some sort of combination of the two, and this is something that I do endorse, and that would be that you might want to get, let's say, $20,000 or $30,000 worth of whole, a lower amount, because sure as shooting, we're all going to pass away someday, and there are going to be funeral costs. And we all see the TV commercials about how those numbers are climbing. So it'd be nice to have $20,000 or $30,000 if and when you pass away, and you're probably going to make it. The odds say that we're going to make it past the average life expectancy age nowadays, which I think is around 78 years old, maybe for men, and maybe a little older for women. So you get a little bit of a whole life that you know is going to be there, but you get your biggest chunk of benefits from your term life, and you hope that takes you, right through your primary earning years, the years that you're paying your mortgage, the years that your kids are going to college. So you've got that to fall back on if the unforeseen happens. So maybe you're looking at 500,000 of term, or $1 million of term, or 750 of term, and then just 20 or 30 of whole. That way you know that when you pass away, that you're not going to be dropping a bill for final expenses on the loved ones that you leave behind. Final expenses being your funeral, your casket, your maybe you have a few bills hanging on, or pay off that car debt if there is any. Or that big party that everybody wants to have to celebrate your life, et cetera, et cetera. So those are what we talk about, final expenses. So that's my feeling on that, and that's my feelings are pretty consistent with what most of savvy financial planners and people in the know in the industry would say. The biggest concern that you need to look out for is making sure that you're not talking to a life insurance agent who's really trying to drive you towards whole life, because oftentimes if they're being that aggressive, it's because they know that they can make probably 6 times as much in commission as they would selling you term life, and that's pretty enticing. Here at Ken Parson Insurance, I don't do any of that. I am strictly out for what is best for you when it comes to coverage and when it comes to the cost. So I hope that's helpful. Thanks, and have a great day.